What is up YouTube? Welcome back to the FFX Academy. Today I'm going to be sharing with you 3 simple secrets of trading gold. So if you're interested, stay tuned. It's coming. Before we move on, I need to clarify that these are not industry secrets. These are my observations I picked up along the way since I started trading gold back in 2014-15. I was in a really lucky situation because the compliance department at the hedge fund allowed me to have unallocated gold positions within my portfolio. So everything I'm going to explain today are my observations for the past few years, and they really helped me to understand the characteristics and behavior of gold. So let's see the first one. Consolidation and flag patterns. Now gold has the tendency to move in a consolidation for a very long time, but once it breaks out, it has a huge profit potential. So going back on the daily chart on the gold USD spot market, you can see that gold found support back in 2018 August at $11,060. As soon as it tapped into that level, it moved back up and then started to move sideways for about 3 to 4 months. And once you identify these consolidations, you can draw your first trend line at the top and then after at the bottom. And my friends on the chart, you can see this is a wedge, and who doesn't like a good wedgie? And as soon gold broke out from this consolidation, it came back to retest. Now as soon as you have an impulse move to the upside or downside, you can use a Fibonacci from bottom to top, and you can see that the price respected very well the 61.80 on the chart. And then gold moved up thousands of pips. And if we move further ahead on the chart, you can see that we have another consolidation, which is actually a bull flag pattern. Now bull flag patterns can be easily identified because they are trading against the general market direction. So you can see that the market direction is clearly bullish because gold price is going up, but then the bull flag pattern is going against the general market direction. Now you cannot use Fibonacci really on the flag patterns because it's difficult, but what you can do is you can trade based on support and resistance, which I teach in my course. As soon as gold broke out from this consolidation right here, so it was moving sideways and then down, creating lower highs and lower lows, but then it found support at $12,074. And as soon as gold broke out from this consolidation, you can see that again moved up thousands of pips. So this movement was 1700 pips. And here's another example. You can see that gold reached 1500 level and then started to move back down again. And what does it look like to you? This is another bull flag pattern. You can identify the top and you can identify the bottom. So this is a really nice channel or wedge. Again, this is going against the general market direction. And once gold finds support below the previous support, because it always has a support below the previous support, as soon as gold broke out, it went up again to $1,600 and then again a little bit higher. But then back in 2020 March, which was at the beginning of the COVID, obviously not just gold market, but every single market has melted. So what you can see on the chart, this massive drop was actually the beginning of COVID, and then gold started to normalize again. So the main point here is trying to identify consolidations on the chart. You can go back years and years and years, months and months and months, and you can identify these kind of consolidation. And as soon as gold breaks out from these consolidations, the profit potential to the upside or downside is huge. Second one is buying the dips and at support levels. So hands up, how many times happened to you that you identified historically well performing support levels and then you place your buy limit again at this level, stop loss just below the previous low, and expecting that the price is going to bounce back. But instead what happened is that price came back to your buy limit, to your support level, price immediately melted, wiping out all of your stop losses and losing money. Well, there's no shame in that because it happened to me as well. And the only way to protect yourself and your account is really simple, using price action and combining higher time frame analysis with lower time frame price action, which I'm going to show you right now. So the first thing you want to do is obviously on a higher time frame, for example the H4 in this example, you identify potential support levels just like this one here, because every single time the price came down to the 1795 level or the 1800, price bounced back up, gaining thousands or hundreds of pips. So naturally what you would do is, again, as soon as you see that the price is coming back down again to this level, you would place your buy limit, expecting that the price is going to bounce back from this level, placing your stop loss just below the previous lows. There is nothing wrong with this method or this strategy, but you have to remember that support levels are often break, and sooner or later they are going to break, and then you're going to lose money. But there is one simple way to protect yourself. So the first thing is, as I mentioned, you identify on a higher time frame potential support levels, potential levels where the price is going to bounce back. And then what you have to do is you go down to lower time frame, for example the M30 or the M15. So you place your buy limit exactly at the previous support level, and what you have to monitor is price action. So price action is the same on lower time frame as on higher time frame. You can draw your trend lines and you can identify market direction. So you can see that we're still in a bearish market direction because gold was dropping down from this top and going downwards. Price tapped into the 70.97 level, bounced back up, but then the price started creating a bearish market structure, creating lower highs and lower lows. And when you see that gold is slowly creeping back to your buy limit, to your support level, like this one here, forming a equal bottom or flat bottom and a descending top trend line, just like this one here, that means that the buyers are getting exhausted and the bears are coming into play. And this is when you have to get out from your position, and do not wait until your account goes down into drawdown and you start losing money, because that's when you start moving your stop loss. That's when emotion starts to kick in, and you're still hoping and you're still fixated that the buy limit is going to hold, the support is going to hold. But this is wrong. What you have to look for is obviously watch price action and watch the market structure. And what you need to look for, that the buy limit is actually the perfect buy limit, which is going to bounce back, is when the price breaks the market structure, breaks the trend line, comes back to retest the trend line as well as the market structure, creating a higher low. And that is the conservative confirmation that the price is actually going to reverse. And once you see these on a lower time frame, you can be 100% sure that the price is going to bounce back from this support level. Just to recap, guys, the first thing you want to do is go in a higher time frame and try to identify obvious support levels where you can place your buy limit. But then when the price comes back to your buy limit, comes back to your support level, you have to actively monitor your trades. If the price is creating a bearish market structure, creating the wedge with lower highs and lower lows, then you have to get out from the trade. And once the price breaks this market structure, breaks this trend line and comes back to retest it, this is going to be your perfect entry. And the final and most important tip I can give you based on many years of experience: if gold doesn't give you any opportunities, or if you cannot see any good entry points, just leave it. Move on to the next currency pair or commodity or index and try to look for opportunities somewhere else. Trust me, the less is more. But I'm interested to find out what kind of observations you notice when you traded gold. Leave a comment in the video below. If you get any value out of this video, please hit the like button and leave a comment in the video below. This is the Alpha FX.